Hi, I'm Vince Molinari, and welcome to SSE TV. SSE TV is a collaboration of the United Nations Sustainable Stock Exchange Initiative and FinTech TV, and we are proud to bring you our episode that highlights and features David Schwimmer, the CEO of the London Stock Exchange Group. Welcome, David.
Vince, thank you very much. Great to be here with you.
Well, it's really a delight to have you here, and I love, maybe we could just jump into your background for a second. Going from being an attorney to a managing director at Goldman Sachs for 20 years, now leading the London Stock Exchange Group. That's quite a journey.
It has certainly been interesting, and I've learned a lot and had a lot of fun along the way. I should mention it hasn't been quite as disconnected as that might seem. When I was at Goldman Sachs, I was spending a lot of my time covering exchanges and market infrastructure. So it was actually, from that perspective, a relatively straightforward transition from advising the sector to now being an executive at one of the leading companies in the sector.
Well, yeah, I thought that was the perfect pathway when I looked at your background with market infrastructure and exchanges. What a rival destination to be at LSEG. So congratulations on that. David, maybe you could frame up a little bit for us, because many people, certainly our audience, hear the London Stock Exchange and think that's what it is. But we have London Stock Exchange Group, 300-year-old diversified holding company in data analytics, market infrastructure. Maybe you can share a little bit about LSEG itself.
Sure. So you're absolutely right. In our name, we have the London Stock Exchange, which is one of the world's leading equity exchanges, and certainly a great part of the business, but it's frankly only a relatively small part of our business. We operate in three main divisions. We have our capital markets division, which includes the stock exchange itself, but also includes other equities trading venues, and then significant trading venues in foreign exchange, and then also in fixed income. And then we have our data and analytics division, which includes the much of the Refinitiv business that we just acquired and closed on that transaction.
And congratulations on that. What a wonderful addition.
Thank you very much. We just closed on that transaction end of January. So terrific to have that as part of the business. In data and analytics, we are one of the world's leading providers of financial data and analytics on a global basis. And then we have a post-trade business, which includes our clearinghouse, London Clearinghouse. And that is one of the world's leading clearinghouses across asset classes, with a particularly strong presence in over-the-counter products, such as interest rate derivatives, credit derivatives. We also clear equities, foreign exchange, and fixed income products. So multiple asset classes there as well.
So much to pick from here. Some of my favorite topics in market infrastructure, data, sustainability. Let's jump in a little bit here. We've seen this great advent in I'd say, increased visibility growth of green and social instruments. Do I guess when we measured on a continuum of 300 years, certainly very new, but would you deem them to be becoming a bit more mainstream? And where do you see that going over the next few years?
So mainstream, I would have to say yes. What we have seen in terms of the transformation of how the financial world thinks about sustainability and thinks about the ESG dynamic, it has been a dramatic change really over the last few years. It's been building over the last several years. I should mention 20 years ago, part of our business, our index business, launched the FTSE for Good indices. And at that time, 20 years ago, it was viewed as somewhere between a niche product and sort of a product that people didn't take that seriously. And now here we are in an environment where really across the board, we have a huge focus on sustainable finance and sustainability across the financial markets ecosystem. So just to give you an example, in a few different areas, investors in 2020, something like 50% of European fund inflows were ESG related. In terms of investors overall, it's about $100 trillion that around the world investors are integrating ESG into their investment decisions. Issuers in 2020, we saw record issuance in terms of sustainable finance, sustainable bond issuance. And then if you go into the bank sector, where banks are rethinking how they lend money and are incorporating ESG dynamics into their lending decisions, their credit decisions. So a pretty dramatic shift in terms of how the financial sector has approached this. Maybe just to spend a moment on what's driving that. I think it's in many ways it's bottoms up in that the public has really gotten on board in terms of demanding this kind of change. And if anything, the pandemic over the last year has reinforced this message. I think there was a lot of really curiosity or question when the pandemic hit. Was this going to put a halt to the move to more sustainability in our financial decisions? And I think it's been just the opposite. I think it's made the world realize, we cannot control nature, and we have to take nature seriously. And in the same way that we have been dealt a blow by nature in the form of the pandemic, I think there's a sort of a greater seriousness allocated to the issues of climate change. And so it does seem that people are taking that ever more seriously, as opposed to being distracted by the pandemic and not taking it so seriously. So it's had a terrific impact in terms of what we're seeing in terms of different governments moving towards net zero targets. It'll be very interesting to see the US plan in the coming weeks. And I think COP26 this year taking place in Glasgow, lots of focus on that, certainly here in the UK, but I think around the world. And we're seeing it as a company. We have our own people very focused on it, our staff, our shareholders, our customers. And I think a lot of companies really see now the risk of inaction. And it's not just reputational damage if you don't do something about it. I think there's a real monetary risk or financial risk. A lot of companies need to think about whether they might have stranded assets if the world is moving further down this path. So also big commercial opportunity, I think, for us and for others in terms of helping the world, the markets evaluate and adapt to this dynamic. And the financial markets have a really central role in helping mobilize capital to deal with it. So I put us in the category of a number of other companies that, as we think about this, we want to be involved in helping address this, as opposed to really letting it happen to us.
Well, David, there is so much awesome information, and from your lens in those statements, I think you could do 5 or 6 different shows on that information. I want to bring a couple of things forward because I think it's really important. So we have the Sustainable Stock Exchange Initiative going on for about 10 years, 100 exchanges around the world that are members. LSEG taking a huge leadership role here. And what I'm hearing now is the bottom-up driven, right? The consumer, the stakeholders becoming consumers in organizations that they believe in, and vice versa. This digital transformation that's come forth as part of the pandemic, this awareness, right? And I think what I really loved what I think you said there, and I don't want to put words in your mouth, but I just want to, it's this level of moving to climate risk from climate change and what that means for us as a society and corporations. And then how do we bring forward investments and investment product to align with that? And I suspect that goes to levels of standardization and perhaps data sets. Am I right about that?
You are. You're right on target. I think one of the real challenges that we've seen over the past few years is that there have been a bunch of different competing standards or competing approaches around disclosure of information and of data by companies, so that investors can evaluate how to think about how different companies and how different investment opportunities stack up in the context of climate risk or various other ESG risks. So there has been this focus on the need to find standardization across disclosure. And that's been hard because, first of all, it's such a dynamic space. There are no single answers. There's no one right approach. A lot of the standards are evolving sort of day by day or month by month. But what we are seeing now, it does feel a little bit like a pivotal moment, because we have the IFRS Foundation, which is the group that's responsible for international accounting standards around the world. And they've launched an initiative to have a sustainability standards board. And they have had a substantial consultation globally. They've taken a lot of input on this. They have a lot of credibility given their history in terms of accounting standards. So I think this may be a good way of really aligning a lot of these different and in some cases competing standards, competing or at least uncoordinated taxonomies, so that we have a chance to really simplify all the different standards out there and come up with a consistent approach on a global basis. And a good thing about this is that it does build on the Task Force on Climate-Related Financial Disclosures, TCFD, which has been one of the real sort of structural underpinnings of getting a lot of this new disclosure out there. LSEG has been heavily involved in TCFD. It's something that we have been working with, I think, going back to its early days. And I should just mention, you touched on this earlier, that Mark Carney and I reached out to many other exchanges around the world to really encourage companies, encourage exchanges to create standards so that their companies could all align with TCFD. And that's sort of an early step in this effort to get greater alignment on a global basis. And hopefully that feeds in well with what the IFRS Foundation is doing. So we're really delighted to be involved in helping to drive those efforts, both with other exchanges around the world, with the Johannesburg Exchange. There are co-leads there, and of course with the UN SSE, which is the key structure around all of this.
I have to certainly give a shout out to LSAG and leading around SDG 17 in collaboration and partnership. So walking the walk for sure. And let's just stay with the disclosure aspect a bit. London Stock Exchange Group helped create and I believe now chairs the Sustainable Stock Exchange Climate Disclosure Advisory Group. And I believe in your early, and perhaps the first meeting, you addressed a group to talk about the net zero strategy. And, I'll just weave in another congrats to LSAG, as I believe you're the first exchange to announce a net zero strategy. So maybe if you can share with us on both of those, if you don't mind.
Sure. Let me start with the net zero strategy. And maybe I should start with why we thought that was so important to be involved there. And it really comes back to our purpose, LSEG's purpose, which is to drive financial stability, to empower economies, and to enable our customers to create sustainable growth. So embedded in that is really the need to address these issues and the issues and the risks and the challenges around climate change, because it is a threat to financial stability. The world and financial markets are waking up to that. Regulators are waking up to that. And if we view as part of our purpose also enabling our customers to create sustainable growth, then sustainability also has to be core to everything that we do. So we did find it really important, I'll say mission critical, for us to be able to take the lead on helping to address this. And again, just to maybe take a broader perspective on it, as a systemic financial markets infrastructure provider, we do play an integral and a systemically important role within financial markets. We, as such, we can help really facilitate this transition. And this is not going to be an easy transition for the world. This is going to be a multi-year, multi-decade transition for the world, and it will take the mobilization of huge amounts of intellectual capital and financial capital for the world to make this transition. And we are in a position where we can act as a facilitator, both for issuers and for investors, to help them make that transition. So it's something we take very seriously. It's something our people take very seriously. And in that context, we're delighted to be the first exchange group to join the UN's race to zero there.
Well, that's awesome. And, when we look at the SSE's Climate Disclosure Advisory Group, the continued leadership. I just think this show is so filled with everything that is so important, from the beacon of LSAG in its historic position as a world leader around capital markets, now leading around net zero disclosure aspects, standardization, best practice. There's real recognition of the integration of the sustainable development goals within our capital markets, and they're not mutually exclusive. And the fact, and I just have to bring it back again, that you highlighted so much when we talk about climate risk as a systemic risk to our planet. Props. Thank you, David, for that.
Well, I should just mention, and I touched on this a little bit before, but I should just mention, this is a big task for the financial markets to really fund this kind of transition to a sustainable economy. It's not going to be quick. It's not going to be easy. It will take a number of years and a number of decades, and it will require enormous amounts of capital and reallocation of capital to sustainable activity, sustainable investments. And that's not all, none of that will happen without having better understanding of it from a data perspective. And in our business, we have both the issuance venue, where on the stock exchange itself, issuers can raise equity capital, they can raise debt capital. But it's hard, frankly, it's impossible for this kind of transition to be done without the data and the analysis, the analytical capability to evaluate how to make this transition. And I think it's really important to have that combination of the data that helps investors evaluate where and how they're going to reallocate the capital, and then also to have the issuance venue so that investors can actually put that capital to work and issuers can actually raise that capital. So this all comes back to our business, our model, which is to be an intermediary, both of ideas, intellectual property, but also of capital. And we're very focused on trying to help the markets understand and evaluate this transition. I think there are some key challenges in terms of making the data consistent, having standardization of the disclosure requirements really across the board, and ideally on a global basis. So much more to do there, but I think a lot of progress has been made.
Well, I know we're in overtime, David, but again, you just bring this point forward of us all working together. What a heavy lift this is, but we're entrepreneurs, we're innovators. We can get that done. And I clearly see why Refinitiv is so important to LSAG. And as we look at standardization, you look at meta tagging to what was previously perhaps externalities, and how that creates structured data sets around that to give us that information that's so sorely needed when we evaluate investments. So totally applaud that as we move ESG to perhaps a world of alpha generators to be capturing alpha in new and innovative ways. Thank you so much for joining us today. It was really enlightening, and congrats again to you and to LSAG for the leadership, the great work that you've been advancing, and love to have you back again when you're ready. I know your schedule is quite packed, but thank you for being so generous with your time.
Well, Vince, thank you very much for having me today. It's an important topic, and really appreciate what you all are doing to help highlight it as well. So thank you.
Our pleasure, David. Thank you.